next stock on the menu is Altria. It's a divisive one. A lot of people think it's a yield trap. I myself did, but we'll take a deeper look at it now. So the ticker symbol on the New York Stock Exchange is MO. It currently costs $41 per share. It pays 98 cents per share 4 times a year. The next ex-dividend date is the 20th of December, and that will be paid out on the 10th of January, and it currently has a very high dividend yield of 9.2%. I started my position on the 21st of March of 2021, and I'm currently about 5.2% down. Altria is up about 2% in the last month. It's down about 4% in the last 6 months. It's down 8% year to date. It's down about 15% in the last 5 years. And since the beginning, it's about 5,950% up. So a quick overview on Altria stock. And there's a potential 7 points it can earn in this section. So Altria was founded in 1985. That makes it 38 years old and earns it 0.7 out of a potential 1 point. It's based in Richmond in the United States, and it operates in the consumer non-cyclical sector in the tobacco industry. And quite simply, they have a portfolio of tobacco products in 2 segments, which are smokable tobacco and oral tobacco products. They own brands like Marlboro, Black & Mild, Copenhagen, Skoal, and a few e-vapor products or vapes. They have 6,300 employees, which earns it 0.6 points out of a potential 1. They sell their products around the world, and the product that they sell is highly addictive. They also have about 160 brands under their belt, so for their product and services moat, they earn 0.8 out of 1 point. The Wall Street Journal currently has them as a bit of a mixed bag, but the consensus is hold. Yahoo Finance is pretty much the same. It gives them a 2.7 out of 5, which is a hold rating. Benzinga is much more positive. There's a total of 33 ratings, but the overall consensus is buy. TipRanks has an overall consensus of hold. It gives them a 7 out of 10. A straight Google search gives them a consensus rating of hold, which is based on 3 buy ratings, 4 hold ratings, and 1 sell rating. And the industry in general is one that will be around for a long time in my own opinion. Their products are relatively cheap to produce and they're highly addictive. Cigarettes at home cost nearly €20 a box in Ireland, and people are still buying them. So for the news, analyst sentiment, and the outlook of the industry, I'll give them a 0.75 out of 1. Altria has a current market cap of $73.8 billion, which makes them a large cap stock and earns them 1 point out of 1. And this is how many shares are currently outstanding, the total amount of shares of Altria Group. It's about 1.77 billion. And this is how many shares of Altria that the insiders of the company own themselves. It's only about 420,000. So less than 1% of the company is owned by the insiders of Altria, and that earns them 0.1 points out of a potential 1. So for the overview, Altria earns 4.45 points out of a potential 7. And now for the valuation of Altria, there's a potential 4 points to earn in this section. So Altria has a current revenue of $25 billion. That's the total amount of money that comes through the business. Their profit margin over the last year is 23%, which is very good. And over the last quarter is 34%, very nice. That earns them 1 point out of 1 for profits. You can see in the summary as well, there has been decreases, but slight ones. 3% decrease in revenue. Net income applicable to common stockholders increased 98%, very nice. Smokable products section had a decrease in revenue of 3%, that's not too bad. Their oral tobacco segment had an increase of income of 4%, and their dividend per share has increased from $2.74 per share to $2.86 per share per year. Their level of debt is not good though. Over the last year, they have a debt to assets ratio of 110%, pretty bad. And over the last quarter, it's the same, 109%. So that earns them 0 points out of a potential 1. And these cash flow figures are for last year. So I'd say in the next couple of weeks, they'll release 2023's details. But they had a starting line of $5.76 billion. Their cash flow from operating is $8.26 billion. Their cash from investing activities is $782 million. And their cash from financing activities is negative $9.5 billion. So they had a net change in cash of negative $500 million. Now for a company this size, that's doable, but it's still not great. The cash position that they're in at the moment is not fantastic, but a huge amount of that is going towards dividends. So for their cash flow, I'll give them 0.3 points out of a potential 1. Now, for every one of those billions of Altria shares that exists, Altria earns $3.26 per share. So it has a current price to earnings ratio of 12.81. And the average price to earnings ratio for the tobacco industry in the USA is 19. So it is trading below the average price to earnings ratio, which would indicate that it's currently at a good price. That earns it 1 point out of a potential 1. So not too bad for the valuation. They earn 2.3 out of a potential 4. I have seen better, but I have seen worse. And now for my favourite part, the dividend. There's a potential 6.5 points to earn in this section, 0.2 of which are whether or not they pay bonus dividends in the last 5 years. So Altria pays its dividend 4 times per year. That earns it 0.8 points out of a potential 1, and they don't pay special dividends, so they do not earn the extra 0.2 points. They currently pay 98 cents per share 4 times a year, which is a pretty high dividend yield, above 9%, and it earns them 0.3 points out of a potential 1. Their target dividend payout ratio is about 80% of their adjusted earnings per share, and at the moment their dividend payout ratio is 77%, so it is high, but it doesn't indicate that they're going to cut the dividend anytime soon. They generated $5.9 billion in the first 9 months of the year, and that's enough to pay the $5 billion in dividends. But because it is a little high, they get 0.5 points out of a potential 1. Now their dividend growth rate, their forward dividend yield is 9.4%, and they seem to have been raising the dividend consecutively since 2002. But they did have a bit of trouble paying the dividend around the dot-com bubble. But in the space between 2002 and 2023, the dividend per share has gone from 56 cents to $3.84 per year. Their dividend growth rate over the last 3 years is 3.8%, over the last 5 years is 5.6%, over the last 10 years is 6.6%, and over the last 20 years is 7.24%. So if this continues and you were to invest into Altria today, you can expect your yield on cost to go up as high as 17.8% in 10 years' time. This earns them 0.8 points out of a potential 1. They've been paying dividends for the last 62 years in a row. This earns them 1 point out of 1, and they have raised their dividend every year for the last 20 years in a row, which earns them 0.5 points out of a potential 1. So pretty good on the dividend front. Altria earned 3.9 points out of a potential 6.5. So overall, Altria earned 10.65 points out of a potential 17.5, and that's a rating of about 60.85%, which in school would be given a D mark. So not the best, but not the worst. Their debt is through the roof. Cash flow is enough to cover the dividends, but not fantastic. But their dividend history is strong. So that's all for Altria, and I'll see you in the next one.